Welcome to Your Mortgage Matters, brought to you by Angel Oak Home Loans, your weekly look into what's new in the mortgage business and how it impacts you. And now your host, Matt Kreger.
Welcome back to Your Mortgage Matters podcast. I'm Matt Kreger, Senior Vice President, Divisional Manager, Angel Oak Home Loans. We're so grateful you're spending your time with us today. I have two special guests. Both guests are senior loan officers for us here at Angel Oak Home Loans, and both have been with the company, Chris a little over a decade and Rick a decade, so they know the mortgage industry. Chris, what year did you get started in the mortgage industry?
2001, right before 9/11.
Wow. Okay, so 20 plus years. Rick, what about you?
I was in 1998, and it was pretty much just before automated underwriting. You know, it was still a manual process back then.
Are you supposed to be dating yourself like this? Were you a small child when you started? Were you an adult?
Oh, yeah, I was a prodigy. It was, youth. No. Yeah.
So over 20 plus years of experience for both Chris Billman and Rick Fantucci, and they know Angel Oak Home Loans well, because like I said, they've been here over a decade and they've been a part of so much. We talk a lot about Angel Oak Home Loans being different than so many other mortgage companies. And we're sitting right now in Atlanta where there's just hundreds and hundreds of mortgage companies. And if we really are different, I think we need to take time today to talk about that. And I think we're different because of loan products that we have. And we want to talk about that today and share some examples, some challenges we've seen, some loans that we've saved. And these are lives that have been altered because they've been able to put their family in a home when before they were told no. So we're going to go through some of those situations, some products we think can really help the market and help people. So let's jump right into that. Of all of our loan products, Chris, what would you say is the one that you utilize the most and why?
Bank statement, because the self-employed individual, although they can take advantage of how the tax code's written, it is a underserved sector of our industry because unfortunately Fannie Mae and Freddie Mac think that a tax return is the best form to show whether somebody can afford a home or not from a financial sense. Whereas is with our bank statement program, when we're looking at credit, of course, oftentimes these guys have superior credit. They have money in the bank, so they know how to save. But the tax return may not be a good way to show what their cash flow is, but when you go look at their deposits, it's very strong then. I hate to use a cliche, but it's a no-brainer at that point, and that's something that's really set us apart from all other lenders out there because the self-employed borrower knows that their bank statements show a true cash flow of what they make versus a tax return.
So helpful. You said underserved, though. These are business owners. They're doing pretty well. They're applying for home loans. So how is that underserved? I'm not sure I understand.
Well, they're underserved when it comes to mortgage product. They're underserved because if you go to, your Bank of America, your Wells Fargo, any kind of traditional lender that is going to underwrite to their traditional tax return, that's not going to be a good representation of how they can pay back their mortgage based on the write-offs. So when it comes to mortgage lending, it's an underserved population. There's not enough mortgage product out there for them, whereas this bank statement program is certainly something that is right up their alley, so to speak.
What Chris is talking about, I think it's so important for our listeners, everyone to hear, because there are so many small business owners in America, and you need to know that you do have options. You do have the ability to contact a loan officer at Angel Oak Home Loans and discuss your businesses, your tax returns, your sources of income, and to get qualified for a bank statement loan. Rick Fantucci, what loan product would you say you utilize the most?
Well, business bank statement loan seems to be specifically 12 months. Business bank statement loan seems to be the one that is most used. And I say that because you're looking at a snapshot 12 months back on the business, and we could choose to go 12 month or 24. I find that 12 is typically the best, in terms of where that business is at. Businesses are typically growing, so the last 12 are going to be better, most likely in monthly income calculations rather than 24 months. But, obviously Angel Oak has a wide variety of products, and I would say 75-80% of what we do is your conventional prime jumbo, government loans, but that 20 to 25% is our portfolio, which, you talk about separating us. We're not just a non-QM lender. We're also a typical lender like banks have. So I would say 12 months bank statements, and I like Chris's use of word in underserved. I mean, I kind of joke on that word, like banks look at them as undeserved, and we look at them as underserved.
Oh, I love that.
So I think that's a great word for a portfolio lender, and so again, as far as Angel Oak products go, I think our most popular, best loan, average loan sizes, all of that would be 12-month business bank statement.
Rick, I love how you brought up 12 months. It's important for everyone to hear that because you automatically think 2 years when it comes to mortgages. That's not always the case. Chris, we talk about these products helping. What is the problem? What problems do you see most? Like, what are the challenging situations that realtors and builders are going to run into when someone walks in and says, I'm self-employed or I have some challenges in the past? What are they saying?
Oftentimes, it's not necessarily what they're saying, it's what the borrowers aren't saying, because they don't necessarily know how to formulate a conversation with, whether it be a real estate agent or a builder. Look, I know that I can pay for this house, but I know that the last couple of loans that I've gotten have been difficult, or I've been turned down elsewhere, but I know if there's a will, there's a way. They're a business owner. They're going to persevere, right? That's right. So with that being said, it's just a matter of getting them in front of the right audience, which is us. And oftentimes, if it's going to be a relationship that we have with the agent, a relationship we have with the builder, or in some cases, it's going to be a situation to where it could be another banker or a lender that we're working with that says, all right, we can't help you because of this or that, but go talk to Chris at Angel Oak or Rick at Angel Oak, because this is something that they're known to do. Also, something else that's sort of unique about that community is self-employed people know other self-employed people. There's a particular company that I work with that has franchises all over the Southeast, and they provide a certain product, and because of them being self-employed, it's a heavy cash business too, they all speak to each other, being in the same industry like we do in our industry, and your name gets passed around a lot. So, having said that, that is sort of one of the ways that we do get introduced to this. So hopefully that we're not necessarily having to tell the builder or a real estate agent no. They can already come to those people already pre-qualified with a non-QM pre-approval in hand. Wow,
that's excellent. So Rick, we talk a lot about the tax returns so far, or the lack of tax returns being able to help someone get qualified. What are some of the other challenges you see related to either income or down payment? Because not everybody looks picture perfect or walks into your office and says, I've got gobs of money, let's do this.
Yeah, so we talk about using bank statements, but Chris and I actually worked together on a loan over the summer. He was heading out of the country, and he got a referral from one of his loan officer contacts who he had worked with in the past, knew that we have portfolio. And the guy has a couple of businesses. His problem was during COVID year of 2020, his income was declined enough, it was down, so that when you looked at 2021 and 2020 taxes, it just didn't look clean, and he was trying to refinance a construction loan into permanent financing, and he was stressing out because he was getting to the end of that completion. And so, in this situation, we used his one-year tax returns under our Platinum program. We were able to help him refinance. So it wasn't a bank statement loan, it was full income verification, but jumbo loan limits are almost always going to require you to have a 2-year history of income to qualify. And in this case, we were able to do it on a 1 year on our Platinum. So it was I think it was about a $900,000 refinance, and the guy loved us. And his referral partner loved us too, because we were able to help him out. So I think that happens. I think there was also, I had a situation during COVID where there was approved forbearances, but there's also a guideline out there on what makes it eligible to, if you've gone into a forbearance agreement, you have a certain amount of time where you would have had to start making payments again. And sometimes that little thing gets misconstrued, and borrowers don't understand that they stayed in the forbearance too long and now they can't refinance and take advantage of equity they have right now, or do a sell and buy because they have this hanging on there. And so, like on our platinum look back period, you may not qualify now for FHA or conventional financing or jumbo, but now, you can look at doing a loan with on our platinum program because the look back period is less than it would be. So I think that's another situation that can happen.
For all of us listening to your Mortgage Matters podcast, hosted by Angel Oak Home Loans, we've been talking for less than 10 minutes, and Chris Philman and Rick Fantucci have already given us probably 8 to 10 solutions that you may not have known that can help either you and your family get in a home, or people that you represent if you're a real estate agent, a realtor, or a builder, to be able to help your clients. Rick, you said something, either Chris or Rick, you can answer both, but you said something in that last answer that really caught my attention. You said another loan officer had referred it to Chris. Do y'all get leads from other loan officers?
Oh, yes, often.
Tell me, why wouldn't they just do that product themselves?
The products are detailed, and it could be possibly a little cumbersome to them because the companies that they work for, since they don't have the product, they don't know how to promote it. So maybe it's wise of them to say, rather than learning how to do this, refer it over to Chris or to Rick or to Angel Oak, because they're going to take care of them, get them to the closing table, at least still give a good reputation, leave a good reputation for the referring loan officer over to us, because we're going to be able to do something they can't or won't.
Yeah, I agree. And to add on to that, essentially the year 2020 and the year 2021 and first quarter of 2022 was a refi boom. A lot of low-hanging fruit there. So loan officers were just so busy on refis that any of those unique situations, they just felt like, I don't need to deal with this, kind of pick the low-hanging fruit, and then they kick it off. So a lot of times, a loan officer may not have the ability to do that product where they're at, or they simply are just busy enough to where they didn't care and they just didn't want to get to know, as Chris mentioned, the details of it, which is an advantage that Chris and I have had, and your Angel Oak loan originators is getting constant training on these products that we do. Even though it's 20 to 25% of our business, we know it inside and out, and so it's just easy and second nature for us to switch gears from talking to a buyer who may be thinking they're going to use tax returns, but you can't, and we know how to navigate through that. And it's all knowledge,
right?
And knowing.
And with that too, there's a small community here in the greater Atlanta area to where other loan officers are going to know, Rick's the guy at Angel Oak or Chris is the guy at Angel Oak, because they speak. We've been here long enough, people know.
Over 20 years, Chris.
Over 10 years.
No, 20 in your career.
Oh, 20 in the career, yeah, but over 10 years here at Angel Oak. There's been time and again where I might not hear from somebody for a year and a half, but they call me and they run a scenario by me, and I'm like, yeah, that's right up our alley. But to Rick's point, the guidelines on this product, because it is something that can be a little bit more sensitive to the market, do change from time to time. And leadership at Angel Oak definitely has the lines to give us the training as soon as they can. If we need to switch something pretty quickly just based on market conditions, they'll do so. They'll let us know, so we'll know how to sell it. And to that point, with the reputation that we have, that we're not going to go after people's referral partners or anything like that. It's like, you've been given a job to do. I need you to get this loan to the closing table. I'm going to do my job.
Chris, I appreciate that insight on answering that. We've talked a lot about fallout, and I know there's all these other loan officers and people in the market referring you business because you have been at Angel Oak over 10 years and you've been in the market over 20. Tell me a little bit about, when we say fallout, why is there fallout, and how have you been able to save the day on a loan?
Oftentimes it's because another lender could be working on something and they're not quite as knowledge based on their guidelines or things to come or events that can happen during a pre-approval process. For example, we're coming close up on October 15th. What happens on October 15th? Your people that have delayed tax returns are going to have to file them. So let's say you had somebody pre-approved at another lender for 21 and 20, everything looked great. Well, let's say they're still looking for a home. November comes around, it's like November 2nd. We found a home. We want to put it under contract. All right, well, send me those tax returns. Let me take a look at them. Boom, declining income.
Wow.
Something like that. Self-employed individual, well, they could have declining income. It depends on how much it declines or whatever the situation may be. But in a situation like that, it's being knowledge-based enough to know from a perspective to know what your borrowers could run into from a loan officer standpoint. To have that attention to your files and say, hey, look, I need to get a draft of that tax return before you file it on October 15th. It's coming back to guidelines. Oftentimes, whenever I'm looking at something that is fallout somewhere else, I can look at a timeline and say, well, if this would have happened then instead of now, that could have been prevented. If the borrower could have had a knowledge base of how to do something, such as a large deposit. Let's say they sold a lake house or they sold a truck, $50,000 or whatever it may be. Well, let's talk about that before you deposit it, because if that's going to become part of the down payment, let it not just be a deposit that happens into the bank account. It's not just that. We can use it, yes, but we need a bill of sale, we need a couple of driver's licenses to back it up, something of that nature. There's just a process. So oftentimes it's a lost attention to detail whenever I get fallout that we come up with a solution that otherwise I know in my circumstances would have handled differently.
So it sounds like they need to get to you early.
Absolutely.
It's all about timing.
Yes.
You work with a lot of investors, don't you?
I do. And to that point, I work with a lot in the Panhandle. There's a lot of product that we have that separates us differently. There's a fallout that actually I closed over the summer. There's an oil guy from Texas. He has these different income events that happen about every 3 years when he's putting these these assemblages together that then get sold to an oil company. There's already, I forget the word for it, testing or something like that, to where they say, yes, this is viable for oil. He puts an assemblage together, and then he has a windfall of about $3 to $4 million every 3 to 4 years. And so his last windfall was 3 years ago. He's buying a $1.3 million VRBO home in Destin, 30A. And he's got it under contract. They call me about 3 weeks before it's closed. It's gone through 2 different lenders. They can't make heads or tails of it. And so in that situation, he doesn't have income. He doesn't have viable employment that we can use at this point. So what I did was, after looking at it for 30 seconds, I said, this is a perfect product for our investor cash flow, which in that particular circumstance is we're not looking at an individual's income from their job. We're looking at what the income potential is only from the property. So the property is going to rent for X. He's going to buy it at 1.3, put down 20%. He was very happy with what his returns are going to be. The rate might be a little bit higher because it is somewhat even investment on top of investment, even more risky, but we could get the loan done. We could meet his goal, get him to the closing table, and we did. Fantastic. With a loan that is very easy to underwrite, whereas he spent months trying to get this done somewhere else. And once he got it in our hands, we had it closed in about 3 weeks.
So investor cash flow, if you're an investor out there, it's the largest segment growing business in America for home loans. I would contact Chris Philman, Rick Fantucci, a loan officer at Angel Oak Home Loans, who has these products that can assist you, because that's a complicated situation.
It is. And to that point, though, one of the things that is unique to Angel Oak, because we have all of this product, as soon as we start diagnosing the situation with the borrower, it can be triage, if you will. We can immediately say, okay, conventional, nope, FHA, nope. All right, traditional investor, maybe. And then as we go deeper and deeper, we can pivot amongst all of these products within a few minutes to figure out the path that we're going to go down to get you to the closing table quicker.
Yeah, I think that's a great point, Chris. And I kind of use the term fall in. So fallout is usually when someone is referred to us, it's already been kicking around at another lender for 3 or 4 weeks, and now they're in damage control because it's not going to work. Fall in is where we get it from the beginning, and doing, what Chris just mentioned. You walk through it, and right away what you're going to switch to, and you end up with your normal 30-day closing. So I like calling it fall in when they hit us first, and fall out when we have to come in and save the day.
Wow, Rick, that is fantastic. Again, be proactive. Reach out to a mortgage professional, Angel Oak Home Loans, that can assist you with your situation. Y'all sound like heroes on the fall in. It sounds like somebody, Chris, when you went through the detail of helping an investor who had been turned down by 2 other companies, are y'all heroes? And if so, what makes you a hero in the mortgage world?
Absolutely. I mean, we hear it all the time. Oh, you saved the day. It's like, it's commonplace because there's nobody else that really that has the product knowledge, the staff. I cannot speak enough about our underwriting team, about our leadership, about how everybody that is here is truly committed to the company, from the people that open the door to the people that close the loans to the people that service. Our underwriters here have been here on average. Remember, the company is just over 10 years old. I would probably say at least 6 years or more. And to have the relationship I know that Rick and I have with the staff, to where we could say, crap, this is not going the way we want it to. It's 10 o'clock at night. I can shoot a text to somebody. If I don't talk to him then, I'm getting a text the next morning at 6:30. So a problem doesn't sit around. It gets.
So we need
fixed.
to give you a superhero name, is that right?
Or maybe we can make a movie.
Okay, do a movie. Rick, do you see yourself as a hero in the mortgage world?
Yeah, I mean, Chris is absolutely right. We get those calls, those distress calls, and oftentimes we're also playing psychiatrists because you've got a lot of emotions going on. So again, not just saving the deal in terms of a buy and a sale. I think we can also minimize the stress of a situation. So typical call on one of those is a realtor first, or the realtor had the buyer call, and you walk through the scenario, you figure out what you can do, and then you kind of put them at ease once here's how we're going to take it. Then, it happens more than you would think, but, we've had times where the listing agent will want to talk and get an understanding, because if they're going to extend the contract for 3 weeks or whatever they might need to do in the situation, they just don't want to do it without knowing that there's a pretty strong chance that this is going to get to the closing table. So they can put their seller at ease, and that stress of having, being a listing agent and having the stress of telling your clients that we picked the wrong, buyer, or that the buyer chose the wrong lender, and now we're trying to figure out, do we cut bait or do we give Angel Oak a few weeks? And we've got such a good reputation now that most of the time, like early on, I would get a lot more calls from the listing side, but now I think we're just got such a reputation out there for getting those deals done that those calls are, oh, it's Angel Oak. Okay, yeah, I had a loan that we did over there, and yeah, they got it done. And so I think we become heroes in different ways, but a lot of times it's just tempering emotions that are going on. And, at that point, buyer's embarrassed and stressed, and the seller is nervous and stressed. So it's our job to be quick. You mentioned being able to get quick information by having access to the right people to know if, because the last thing we want to do is come into a situation, prolong it, the inevitable of it not working out. So we want to find out quick if we can do it. And most of the time, Chris or I, or, an Angel Oak loan officer will know, yeah, I think we can do this, but there are those cases where you have to
dig into it a little bit.
Yep.
But with that too, though, we say yes quick, but we'll say no quicker. Based on the knowledge base that we have, if it's something that I know that credit score is not there, assets aren't there, job time isn't there, let's go ahead and cut bait, so to speak, rather than try to take it down a path that is going to waste people's time and reputation.
Sure. We started this podcast with Chris Billman and Rick Fantucci, talking about how Angel Oak Home Loans is different than the rest of the market. We said that there's hundreds of companies and loan officers that exist, and we're different. And what you've just explained over the last 20 plus minutes is exactly that, how much different you are as a mortgage professional, how different Angel Oak Home Loans is. And so this has been very beneficial, I know. And but I want to send us off on one last question before we close out. What words of encouragement do you have for borrowers or realtors that are listening? There's a lot of information you've shared, a lot of save the deal, save the person, save the opportunity. Give us some more words of encouragement as we head into what has been a challenging season this year in the mortgage industry.
Well, some encouragement is that if you currently are not working with somebody that has non-QM options, you need to, because it is going to be a part of the business. With Fannie getting out of non-owner occupied second homes, there is a specific market that Fannie Mae, Freddie Mac, your GSEs are leaving behind as quickly as they can, which is going to leave borrowers behind, which is going to leave homes behind for buy and the sale side. So if you're not working with non-QM people right now, you better start, because I can tell you from personal experience, last year, 35% of my business was non-QM. This year, at a high level, 52% has been non-QM. There is data that you can see out in the marketplace that says that you have to access this product in order to continue your career in the trajectory in which it is going.
Superhero Chris Philman with that. Rick, words of encouragement?
Yeah, I think I have three things to speak to. One of them was borrowed from, I presented at a high-level realty group today, and the vice president said, told everyone, told the realtors, this is the time where you just have to roll up the sleeves and put in the work. You got to double the amount of calls you typically make. So just know that there's business out there. You just have to work a little bit harder to get it, but get those good discipline and practices on, your mining and marketing, and you just have to have more swings right now to maintain your volume. We all know, and this is almost a blessing. Like if you talk to most realtors, from the beginning of 2021 through the first quarter of maybe even through May of 2022, they didn't have time to do anything. They were drinking water through a fire hose. So rates were low. And it was multiple showings. You have buyers that were in multiple offer situations, and this industry, quite frankly, from the buyers, the realtors, the mortgage companies, operations, like everyone was maxed out. The only one benefiting in all that was the seller, because the seller just had to say, I'm ready to sell, and they know they're going to get multiple offers, right? So right now, like when rates spiked, that changed. So a word of encouragement here is there was a lot of frustrated buyers at the beginning of the year that missed out on a lot of loans and just got disheartened. And then when rates went up, now they're like, have a whole other mental block. But if you can re-engage with those buyers and explain to them that, why don't you talk to my lender? And right now there's less competition on the properties that are available. So even though rates have gone up, you're not necessarily having to pay $50,000 over asking to get that house. So time to re-engage. And Angel Oak rolled out something which I think is worth bringing up. At the beginning of the month was our Angel Oak Advantage program, where we assist with no seller. We assist with the lender fees, and we essentially allow a buyer to come back to Angel Oak and refinance within a 3-year period. And I think having that would give somebody some flexibility on getting a home at the market price right now compared to what it's going to be down the road. And so I think that if you're a realtor and you're worried about buyers' perception of rates, just have them pick up the phone and talk to a mortgage professional. Sure. and get back out there, because when you do make your offers, there's not going to be multiple offers. So, and then the last thing I'd like to point on is knowledge. I think that Chris did a great job of talking about non-QM. Angel Oak has a fantastic podcast or not a podcast. Angel Oak has a fantastic
podcast.
We do have a fantastic podcast. We have a fantastic webinar that is hosted by Liza Peavehouse, who will talk and explain, and specifically for realtors, about what it is in non-QM. So I think it's great. We typically do it once a month. We should have something coming out there. I think we have one coming up in the next 10 days or so. But take this time to learn more about product and other types of scenarios so that you don't miss out on an opportunity when you're talking to a potential buyer that you didn't know could happen.
So learn, engage. I know everybody learned today. I'm so thankful for Chris Philman, Rick Fantucci, two mortgage experts in this industry who have proven that through the knowledge they've just imparted upon us here on Your Mortgage Matters podcast with Angel Oak Home Loans. I appreciate your time spending with us. And for all the listeners out there, we'll talk soon on the next podcast. Everybody have a great week.
Thank you.
Thanks.
Thank you for listening to Your Mortgage Matters podcast, brought to you by Angel Oak Home Loans, where achieving your unique personal or business goals for financial success matters to us. It's all about you. Help us educate others. Please pick up your mobile device and hit the like and share button now. Angel Oak Home Loans, LLC, NMLS 685842, Equal Housing Lender.